Today we're going over 11 sectors that drive the economy. Whether you're an investor, a trader, or just curious about how money moves, understanding these sectors is key to making smart financial decisions. Stick around, because I'm going to break it all down in simple terms, and by the end, you'll know exactly how each sector operates. Don't forget to subscribe for more videos like this one. First up, we have the energy sector. This includes companies that explore, produce, refine, and distribute oil, natural gas, and coal. Big names like ExxonMobil and Chevron dominate this space, operating large-scale extraction and processing facilities. But don't forget about renewables. As the world shifts towards green energy, companies investing in solar, wind, and biofuels, like NextEra Energy and First Solar, are gaining traction. This sector is highly dependent on crude oil and natural gas prices, government policies, and technological advancements in energy efficiency. When fuel prices rise, energy stocks tend to benefit, but when demand slows or regulations tighten, they can face pressure. Next is the materials sector, the backbone of industrial production. Companies here deal with chemicals, metals, construction materials, and even forestry products. Think of giants like Dow Incorporated and Freeport-McMoRan. These companies extract and process raw materials that are essential for manufacturing, construction, and consumer goods. If commodity prices fluctuate, this sector feels it first. Demand from industries like automotive, technology, and housing can drive strong growth, but economic downturns can lead to lower demand for materials, impacting stock performance. This sector also plays a crucial role in sustainability efforts, as companies are exploring eco-friendly materials and recycling solutions. Then we've got industrials, a massive sector covering everything from aerospace and defense to construction, manufacturing, and transportation. If you see airplanes, railroads, or big manufacturing plants, you're looking at this sector. Big players include Boeing, Caterpillar, and Union Pacific. Companies in this sector manufacture machinery, equipment, and tools needed across multiple industries. The transportation industry, including airlines like Delta and railways like CSX, relies heavily on industrial production. When the economy is booming, this sector thrives due to increased demand for construction and infrastructure projects. However, during recessions, spending on industrial products can slow, affecting growth. Ever wondered which companies thrive when people have extra cash? That's the consumer discretionary sector. It includes automakers, retail stores, luxury brands, hotels, and entertainment companies. If you love Tesla, Amazon, or Nike, this is where they belong. This sector grows when the economy is strong and people are spending. Companies here benefit from rising wages, low unemployment, and consumer confidence. The auto industry, for example, is impacted by trends in electric vehicles, fuel prices, and global supply chains. Meanwhile, online retail has exploded, shifting traditional brick-and-mortar business models. Streaming services like Netflix and Disney Plus also fall into this category, as entertainment spending is considered discretionary. This sector is highly cyclical, meaning it performs best in strong economies but can struggle during downturns when people cut back on luxury spending. On the flip side, consumer staples houses companies that sell essential goods, food, beverages, household products, and personal care items. No matter what happens in the economy, we always need groceries and hygiene products. Brands like Coca-Cola, Procter & Gamble, and Walmart dominate this space. Unlike consumer discretionary companies, staples are more recession-proof because people continue to buy necessities. This sector includes grocery chains, beverage companies, and household product manufacturers. It's also home to tobacco and alcohol companies, which tend to have loyal customer bases. Many consumer staples companies also pay strong dividends, making them attractive to long-term investors looking for stability and income. Health is wealth, right? The healthcare sector covers pharmaceuticals, biotech, medical devices, and hospitals. Think Pfizer, Johnson & Johnson, and United Health Group. This sector is always in demand because people require medical care regardless of economic conditions. Pharmaceutical companies develop and sell medications, with major players investing billions into research and development. The biotech industry focuses on cutting-edge treatments, including gene therapy and personalized medicine. Medical device companies produce everything from surgical tools to advanced imaging machines. Meanwhile, health insurance companies like United Health Group play a crucial role in managing healthcare costs. This sector sees steady growth, especially with an aging population and increasing healthcare needs. However, it's heavily regulated, and new drug approvals or government policies can impact stock performance. Next up, we have financials, the sector that runs the economy. It includes banks, insurance companies, investment firms, and real estate trusts. Big names? JP Morgan Chase, Goldman Sachs, and Berkshire Hathaway. Interest rates and market conditions heavily influence this sector. When interest rates rise, banks make more money on loans, but higher rates can also slow borrowing and economic growth. Investment firms like BlackRock manage trillions of dollars in assets, benefiting from market growth. Meanwhile, insurance companies rely on premiums and claims management. Real estate investment trusts, REITs, own and operate properties, from apartment complexes to commercial buildings, offering investors exposure to real estate markets. This sector is cyclical, meaning it does well when the economy is growing but can struggle during downturns when lending slows and defaults rise. Now, the one we all know, information technology. This sector is all about software, hardware, cloud computing, and semiconductors. If you own an iPhone or use Microsoft products, you're part of this world. Tech giants include Apple, Microsoft, and Nvidia. Innovation drives this space, and it's one of the fastest growing sectors. Companies in IT are responsible for developing the technology we use every day, from smartphones and laptops to AI and cybersecurity solutions. Semiconductor manufacturers like Nvidia and AMD supply the chips that power everything from data centers to gaming consoles. Cloud computing has revolutionized businesses, with companies like Amazon Web Services and Google Cloud leading the way. The rapid pace of technological advancements means this sector is constantly evolving, but it's also highly competitive, and new technologies can quickly disrupt existing players. How do we stay connected? That's where the communication services sector comes in. This includes telecom companies, social media, and entertainment networks. Companies like Google, Alphabet, Meta, Facebook, and Disney are here. The rise of streaming and 5G technology keeps this sector evolving. Telecom giants like Verizon and AT&T provide the infrastructure for mobile and broadband services, while media companies like Disney and Netflix shape entertainment trends. Social media platforms generate revenue primarily through advertising, making them sensitive to shifts in marketing budgets. The sector is also influenced by changes in technology, regulatory scrutiny, and consumer preferences. Now, onto utilities, companies that keep the lights on. They provide essential services like electricity, gas, and water. Think NextEra Energy and Duke Energy. This sector is stable but not the fastest growing. Utilities are considered defensive investments, as they provide steady income through dividends. Renewable energy is a growing focus, with more companies investing in solar and wind power. While demand for utilities remains constant, companies must navigate government regulations, infrastructure maintenance, and fluctuating energy prices. Last but not least, we have real estate. This includes companies that own, develop, and manage properties, from apartment buildings to shopping malls. REITs, like Simon Property Group and Prologis, make it possible for investors to own a slice of real estate without buying property. The real estate market is influenced by interest rates, housing demand, and economic growth. Commercial real estate, including office spaces and retail centers, has been impacted by trends like remote work and e-commerce. This sector offers opportunities for long-term investment, but can be cyclical based on economic conditions. And that's a wrap on the 11 stock market sectors. Each plays a crucial role in the economy, and knowing them can help you invest smarter. So, which sector interests you the most? Drop a comment below. And if you found this video helpful, don't forget to like, subscribe, and hit that notification bell for more insights into the world of investing. See you in the next one.